Hey guys, weekly video where I take you through stocks in the IBD 50 list I think are displaying a lot of relative strength and potentially building a constructed base. Cup and handles, VCPs, flags, Darvis boxes, all of that good stuff. Got 16 to show you on the weekly chart today. MarketSmith are the video sponsor. There's a discounted trial in the comments if you are interested. So we're actually going to start off with oil and gas stocks. So I'm seeing some pockets of strength in what continues to be a very hostile market, but I'm seeing it in oil and gas stocks. I'm seeing it in some healthcare biotech stocks. I'm seeing it in some solar stocks, and also some Chinese stocks are potentially building some high type flags as well. So I want to start off with some oil and gas stocks. So when these stocks are displaying a fantastic relative strength and building out a potential cup and handle, a VCP, a flag, the stock is trying to tell you something, especially if it ticks many of the CANSLIM criteria. So first one here is EQNR, so potential VCP building here on the weekly chart, generally speaking, putting in these high lows. Price now starting to tighten around a clustering of key moving averages. The red one is probably most applicable for you guys to be paying attention to. Appreciate there's a fair few wiggly lines here, but the red one is the 10-week moving average, which is the 50-day moving average on the daily chart. So I like how it's just tightening up there, clustering of key moving averages. Look how the volume's drying up as well inside week. So I like to look for trigger bars. So that is extremely tight candlesticks or bars, whether that be the daily chart, the weekly chart, that preferably sat on one or more key moving averages in the context of the final jigsaw piece of a potential base. So cup and handle, a VCP here, and very low relative volume just helps me create a much more asymmetric risk versus trade, and then I can look to mitigate the risk much quicker on positions and see if I can ride a nice big intermediate term trend. So some of these oil and gas stocks are paying close attention to. A lot of them have very high earnings, very high sales, big breakout years with the earnings per share as well. Let's do a couple others. The next one here for oil and gas is ticker APA. So potential cup and handle building here. Again, price consolidating around these key moving averages. You've got the 10-week line in there as well, that red line, and this potential handle now starting to form under $50, high kind of 40s. Volume is starting to taper off nicely as well. A little bit of seasonality point to that as well, but impressive RS lines. Very good earnings, very good sales. Breakout year with the with the earnings per share. So this is one looking for that trigger bar on the weekly chart and or the daily chart. ExxonMobil, what I then think is interesting, we like to think of the likes of, say, Fidelity as the smarter money in the market. We want to be following where are they investing. So you can see Fidelity here in Q1 of 2022, and then in Q2 and Q3 they have been initiating, then adding to a position. ExxonMobil is one of the granddaddies. So you can see impressive RS lines. So it's now just undercut its 10-week moving line here. So I'm wondering whether it can kind of set up around the 50-day moving average, which obviously then this red line here, the 10-week moving averages in the coming weeks. We'd like to see kind of a reclaim and then just get nice and tight in coming weeks. But that there could look interesting. We obviously have some of the higher quality funds investing here as well. Breakout year with the earnings per share this year. Earnings there, sales there. You have 7 quarters of triple digit earnings. 1, 2, 3, 4, 5, 6 quarters of triple digit earnings. My apologies. So yeah, ExxonMobil looks interesting. So do some of these other oil and gas related stocks. Let me start going through the list. So this one here is Axon Enterprise, a deep cup and handle, but now starting to pull back to the 10-week line in here. The volume is generally drying up over the past couple of weeks, so looking for it to find supportive action around the 10-week and then can it just tighten up in there and potentially put in a low pivot around the 10-week moving average. You've got 3 high quality growth funds that have all initiated and or increased their position in the most recently reported quarter. Forward guidance is up, good earnings share growth rate, good ROE, all of that stuff we'd like to look for. Murphy. So this one here is interesting, I think. Again, it's around its 10-week line, which is this red line here. Very impressive RS lines, both versus the market, both versus the stock zone industry group, which is this green line, starting to build higher lows in here. So looking for a potential low pivot just underneath $300. That there looks pretty interesting. Triple digit earnings in the most recently reported quarter. Big breakout year here as well, going from $4, $13, $14 to then earning $28 a share this year. So I think that one there is interesting. Let's go through a couple of others. Going into some healthcare related ones. This one here is MedPace, potential cup and handle forming here. So oil and gas is an area where I'm seeing strength, but I'm also seeing it in healthcare biotech stocks. Some of the solar stocks trying to hang on in there. Some of the Chinese names look very interesting. And then kind of the odd stock like a Celsius. We will be doing Celsius in this in this video. I think I cover it every week. But MedPace here looking interesting. Very positive reaction to the most recent earnings report. Take a look at these RS lines, super strong here, pulling back to its 10-week line in here. This red line, nice little shakeout to Martel underneath, actually closing on the high of the week. So can this just form that kind of perfect low pivot, nice trigger bar? This is kind of trigger bar action. You see this in here? See how tight the price action gets? See how tight it gets in here? How tight it gets in here? This is the type of behavior I'm looking for, and here's a really good example. See how the volume just dries up in there as well. That is what I am now looking for. So starting to look interesting. Volume is tapering off. Good earnings, good sales coming through. Estimates up for the next couple of years with the guidance up too. So interesting one, that one. Now the healthcare stock is INSP, so a much bigger base here. So this is more kind of Wyckoff stuff. So potentially a big reaccumulation type base here. You have a nice shakeout there, so kind of facey spring type action. Then the stock goes and puts in a higher low. Take a look at these RS lines improving, sales accelerating, nice to see, and potentially a lot of causality here. Relatively recent in terms of the IPO, about 4 years ago, 3.5 years ago. Stock has a history of being able to trend okay as well, and I like this causality kind of point. While the index is basically doing the opposite of this stock has actually been able to rally and put in a structural high low. So it's a little bit short term extended, but certainly on my radar if it can tighten up for a couple of weeks up here. And on the daily chart, say there's at least the 21 EMA is there, as it's going to be a little bit of a slower mover, but it's okay. But this one here I'd like to see on the daily chart, the 21 EMA there as well, and then this could then turn into also a big cup and handle type pattern. See that? And then would like to see nice tightness in the handles. Harmony Biosciences, so similar. Let's just load this one up. So similar-ish in terms of a recent IPO. Now the stock is still pretty choppy. When I look at this, it currently looks like a fairly choppy stock. So it's around its 10-week line, which is getting my attention. But what I want to see is price get really tight. Look for that trigger bar over the coming weeks. But no doubt it's a strong stock in a currently strong area of the market, being healthcare biotech related. You have a high quality growth fund initiating position in the most recently reported quarter. So maybe somewhere in the high $50s, $60. That's what I'm looking for. Triple-digit earnings coming through. Sales look very good, impressive as well, staying around the 40% mark. So I think that one there is interesting, but again, I'm very specific on what it is I'm looking for to actually be targeting a position. So I've obviously got strong stocks on my radar, but there's a lot of criteria they actually need to meet for me to enter a position. So Deere & Co. This one's interesting. Take a look at these RS lines accelerating here, and similar to a stock we were just looking at. Take a look at the size of this base, and it's basically doing the opposite of what the major indexes are doing. So it puts in this shakeout here, it then puts in a higher low, and then take a look at this rally, and it also has a recent history of being able to trend well as well. See how clean this move is. The stock stays above its 10-week moving average the whole time. This red line here, really nice. Potentially a lot of causality. This is a Wyckoff concept of the law of cause and effect. Big causes tend to lead to big effects in both directions. Earnings, in terms of the earnings share, ticking up year over year, albeit the revisions have come down for 2023 and 2024. That's what those red arrows symbolize. And then what I like here is earnings coming in. Most recently reported quarter of 81%, sales accelerating 5, 11, 22, 37. So really good to see. It's starting to go sideways. You had about 4 weeks sideways here. So 4 weeks sideways. It's consolidating on the daily chart around some of the key moving averages. I would like, with a slower name like this, preferably for the 50-day to be there and or the 10-week moving average to be there. But if it sets up perfectly, continues getting tight, let's go down to the daily chart. Okay, so you can see here it's starting to go sideways now. The pink line that you see here, appreciate it's a little bit difficult to see. Pink line is the 10, and then the blue line in, not the blue line, sorry, colorblind aren't I? The green line in here is the 21 EMA. So with a slower name like this, I would like to have the 10 and the 21 there, which we do have. We have a really nice shakeout underneath the 21 EMA. Look how the volume is drying up. Again, a little bit of kind of seasonality to that as well. It's a fairly quiet time of year, but see how it's starting to get really nice and tight in here. There was to close out the week, there's a really nice inside bar that there is acting like a trigger bar. Just want a little bit kind of bigger base in here, but then you can see on the daily chart potential cup and handle, and then on the weekly chart this is then forming in the context of a much larger base. So we have kind of a confluence here across multiple time frames. I like that. Let's keep going. Next one, been around for a while, is Charles Schwab. This one's starting to get my attention because there's this nice shakeout underneath the 10-day or 10-week. Now we're on the weekly chart, chat. Come on. So this red line here, this is the 10-week. Look how the RS lines are turning up. So potential cup and handle with a low pivot. Now there's a very bullish week in here. See this? Really nice week, strong close, good volume coming through on that week as well. And then you're starting to get a little bit of Davis box action for around about 5-6 weeks in there. So just looking for something to set up in the low 80s, around 80, low 80s. That is what I'm looking for. Good earnings, good sales of late. You do have a higher quality growth fund that initiated position in the most recently reported quarter, buying 3.9 million shares. Not bad to see. A couple of others increasing positions, some decreasing positions. So it's a little bit of a mixed bag here in terms of what are the higher quality growth funds doing. But it has a history of being able to trend fairly well as well. So Charles Schwab on the radar. It's going to be a slow mover, so I'd like to go in with very tight risk control on that one. Initial stock kind of 2%, 3% tops on that one. So a solar stock here. So some of these solar stocks I still think are very interesting. If you have not watched Tony Seba's videos on energy disruption, go and watch them. It is well worth your time doing that. So it's a little bit choppy here. I appreciate that to see, but it's bouncing off its 10-week moving average, this red line in here, which is nice. It's starting to build higher lows. It's got a bit of VCP action going on, starting to put in these higher lows. Would like to see the volume taper off. The stock had a positive reaction to the earnings. Then they did a secondary offering, which is why there was this gap down in here. I'll show you on the daily chart. Really good estimates for this year and the next year with guidance up as well. Earnings plus 43%, sales plus 52% in the most recently reported quarter. Just go down to the daily chart on this one. Okay, so you had a positive reaction to the earnings. You then had a secondary offering in here, but the stock is starting to build these high lows. Nice bounce off the 50, which is this red line here. So you have a clustering of the 10 EMA, 21 EMA, and also the 50 SMA. Volume starting to taper off. So just looking for a low pivot to form, and ideally we get a really nice trigger bar sitting on the 10, 21, and 50 SMA. That is what I am. That's what I'm looking for. And then there's other ones. Enphase Energy, First Solar looks very strong. Solar Edge Technologies looks very strong as well. So there are other strong solar stocks. Mobileye Global, I think this one is interesting. We'll go down to the daily chart. So it's Israeli-based company develops autonomous driving technology and solutions and advanced driver assistance systems. There is going to be a very big market, which is currently a small market, which is TAS. I got this from Tony Seba, which is transport as a service. It is basically AI autonomous vehicles in terms of taxi services. So it comes and picks you up, it drops you there, comes and picks you up, drops you there, and you have kind of a subscription to a fleet. So you pay $100 a month, and for your $100 you get 1,000 miles or whatever it may be in terms of pricing models. But I think TAS is going to be transport as a service is going to be a very big industry. So stocks that are kind of linked to that with the AI driving technology, I think could see significant growth. So Mobileye currently ticking some of those boxes in terms of the area of the market it's involved in. It's acted well since the IPO, I would say. Now it's still a little bit choppy in here. This base needs a little bit more time, but if this can start tightening up along the 1021 EMA, something like that there could look very interesting. Impressive RS lines. Want to see that volume dry up. But yeah, Mobileye, stocks that are related to AI driving technology, high on my radar, especially if they've got impressive relative strength. Box. So this one here, a little bit kind of undecided about this one. I think for me, it's probably a pass overall. And the reason is, and it's good to cover a stock like this, is sometimes you want to ask yourself, for your own sell rules, how you're going to manage your position, is the stock likely to be a nice kind of smooth mover, a clean mover? This stock, see how it's kind of all over the place here? It just doesn't have kind of those clean trends. So yes, it's constructive. Yes, the RS lines are very good. Yes, there's a higher quality growth fund. Yes, the earnings are there, the sales are there, the estimates are there, the growth rate is there. I just think it's going to be a little bit of a nightmare. I'd much rather trade. The DE is not kind of a fantastic example because it's a slower mover, but look how just kind of perfect this move was here. See how the 10-week just encapsulated the whole move? I would much rather trade stocks like that. So you can have stocks like Box that are setting up, that look constructive, higher lows. So I'll still be following them in terms of feedback from the market, green lights, red lights around breakouts, but it looks fairly kind of whippy to me. TTC, so potential deep cup and handle forming here, but take a look at these RS lines. Okay, turning up here, both versus the market, both versus the stock zone industry group. Earnings in the most recent quarter plus 98%. Acceleration of the sales 7, 9, 19, 22. Estimates look pretty good for the next couple of years. High quality growth fund increasing their position in the most recently reported quarter. Then this final weekly bar here, nice shakeout underneath the 10-week with a strong close. So can this now just tighten up, put in a couple of weekly trigger bars in there? That could look very interesting. Very interesting indeed. So keep an eye on that one. This video would not be complete without me blabbering on about Celsius. So I've been covering this for many weeks now. I still think this looks very constructive. Stock is starting to pull back into its 10-week moving averages, which is 10-week moving average, which is coinciding with potentially a psychological level of $100. So we may have a confluence there of a very round obvious number, and then also some key moving averages such as the 50-day on the daily chart and or the 10-week. On the weekly chart, stock has a history of being able to run well. These RS lines are turning up. 3 high quality growth funds initiating a position in the most recently reported quarter, and there's just the history. If I go for MNST and let's go and put this back in, let's go 2006. Let's see if that gets the chart that we want. So this is MNST here. So this is Monster Beverages. You've probably seen this in supermarkets or kind of gas stations, petrol stations, depending where you live. But this stock here in 2003. Coming out of the early noughties bear market, this is why you want to really pay very close attention to relative strength. This stock here just absolutely powers up, and the RS lines are improving. You can't actually see it here. Let me go back a little bit. Let's go to 2004, and then maybe we can see it a little bit better. Yeah, here. So see how tight. This is what I'm talking about. You know, when I blabber on about trigger bars in these videos and I need to see very, very specific things for me to target an entry. Look at this in here. This is on the weekly chart. See these bars here. See how you have a clustering of key moving averages, and look at the volume. The point is there isn't any volume and the bars are extremely tight. What does this tell you in terms of supply and demand? It tells me there's hardly any supply coming to the market. And then what's really nice on these lows, shake out, shake out, shake out, shake out, and then look at the tightness that builds in here, extremely tight. And then it's the causality point. So you've heard me blabber on about the law of cause and effect. Large causes tend to lead to large effects. So this stock here goes from about $4 to $34 on this chart in a fairly short period of time, within the space of what's that, maybe 18 months or so. But look look at the size of the base it built. And then these RS lines here, we're turning up into the pivot point, and then it's a clustering of key moving averages. It's the volume drying up. It's the stock just sitting there perfectly with a trigger bar on multiple key moving averages. Really, really nice. So I don't know whether Celsius is going to go on a run like this, but when you think of Monster Beverage, some of the runs that's been on over the last 20 years. When you think about Coca-Cola, more so back in the 80s, back in the 90s, when it was making some very big moves, we have seen some big moves in the non-alcoholic beverage space. So I think Celsius is one to be paying attention to. I think these RS lines look very, very strong indeed. I like how the stock has a history of being able to trend well, break out of bases, and yeah, there's just this cup and handle looks fairly interesting to me. High quality growth funds, they're only investing for one reason. They think they're going to make money. Nice big shakeout demand tail. I know I blabber on about this one a lot, but Celsius at the minute is still looking pretty darn interesting. And then we got Deckers. So again, stock's been around for a while as the likes of like a DE, but the relative strength lines are impressive, potentially building. Cup and handle type pattern, starting to go sideways for around about 4 or 5 weeks in there, underneath $400. You got the 10-week there being the red line as well. Volume is starting to dry up. You do have a high quality growth fund who have reinitiated a position, Lord Abbott Developing Growth. So I think that there is interesting. Nice bounce off the 10-week on that on the final weekly candlestick. Strong close as well. So as I was just showing you with Monster Beverage, looking for very, very tight trigger bars, volume dry way up. That is what I'm looking for. So I'll wrap it up there, guys. Thank you very much for watching. Hopefully you enjoy these IBD videos, you enjoy these Marcus Smith Grow 250 videos, and I'll see you in the next one.